This is Vinny Chopra, Vinny Smile Chopra. Thank you for following me on social channels, listening to my podcast, YouTube channel, all the different channels, and also liking the podcast. Please give us a 5-star review, subscribe to it, share the content. My blogs are there. Please watch them too and read them. Also, YouTube channel, all the different ones. My Vinney and Beau show on Friday at 9 a.m. Pacific every week, and also Abundance Mindset with Vinney and Walter Amarello on Thursday live. Please enjoy this show. Thanks again for everything. God bless you. Hi guys, Vinny Chopra here, Vinney and Beau show. Vinney and Beau, my brother right there. We've been doing it for about 5 years now, I think. Today we got a great guest. Actually, this is December, about 6th of December. We want to save on taxes. That's what has been on my mind because I paid so much taxes in October. And a lot of people in real estate, they are waiting for getting their cost segregation minus K1, which is minus like in April or so or February. But if the deal is not done this year, and if it's not ready to be rented out, you cannot take the cost segregation. You cannot. It has to be open for business, and the revenues have to come in, and the occupancy has to start. So actually, to be truthful, today's topic is about a very special thing. I've been very skeptical about oil and gas. As a matter of fact, you might say, Vinny, what are you talking about? You bet. I've heard some horror stories where the oil wells never come through and the drilling is done at the wrong place and the money's gone and everything. So I want to share with you something very special. My very next door neighbor, I've known him for 30 years. He did exploring and interviewing last year. And he found this company, which is King Operating Corporation. And Michael is here, brother Michael is here, Senior Vice President. He invested with them. He was so happy that he invested again this year. Hold on. Then I'm investing also. So I'm not selling this to anybody, guys. It's for educational purposes only and entertainment purposes. We are not selling any security. But the key thing is for accredited investors who want to get 85% tax rebate deduction against their W-2 income, AGI, then please listen on, because not only this, my other two friends, a very good friend who is this big syndicator, Neil Baba, many of you, he raised $9 million to invest into this one last year, just in December. My another student who actually is a good friend and he's raised money for me too, $22 million has been raising, and he's doing it every year and so on. Anyway, welcome, Mike. I really wanted to welcome you, and please share with us this opportunity. Beau, if you have some questions, please also chime in, brother. Yeah.
Absolutely. Thank you, Vinny. So I'm going to share the screen here and just jump right into it. But my name is Mike Cyrkiel. I'm one of the senior vice presidents at King Operating, and I've had the luxury of working with a friend of Vinny. So I will share here, and I'm just going to get right into the meat and potatoes and just show what I think a lot of the people that are on here would want to see. What Vinny had just talked about, 100% of what you invest in oil and gas, you're able to go directly against your AGI. And the reason for that, I know Vinny had brought up cost segregation with real estate. With oil and gas, there's a different terminology called IDCs, or Intangible Drilling Costs. That was a Ronald Reagan bill that was passed that allows you to go against active income, passive income, as well as capital gains. And year one, you're able to capture a majority of this deduction. We have averaged 85% the last 3 years, which has been terrific. And then the second option is we do pay monthly revenue as well. As our wells are generating commercial amounts of hydrocarbons, we pay that out to the partners, and about 9 to 14%. But really what makes our program special, this is the difference maker between us and all of the other companies that are out there, is that we look for a divestiture at the end within 3 to 5 years. And this is where we're targeting a 2.3x when we do divest and sell those assets. But I know on this, I really want to just stick to the tax portion of it. I did want to describe the full part, but so that brings me to right here, which is gives a little bit more detail on how the tax benefit works. Just an example, for instance, with Vinney on a $200,000 investment, you're able to reduce 150. Now, we use a deduction factor of 75% because in 26 years, we've never not hit this target, but we have averaged 85% the last 3 years. So I typically like to tell investors 80 to 90, or I'm sorry, yeah, 80 to 90% is where you can aim for. And if you are in the highest tax bracket, that gives you about a 30% return right from the get-go, or allows you to save roughly $60,000 against active income, which there really, I mean, Vinny, you can attest, there really isn't anything out there in the market that does that.
That really got my attention. I mentioned it that I had minus 9 million in cost segregations and negative
Mhm.
depreciation accumulated all over the years, and lots of W2 people, directors, business people, doctors, lots of great clients and investors. They really are looking for active loss. And what really impressed me was this was active loss, not passive loss. And that's exciting. That's really what people are waiting for in December.
Mhm.
As 31st of December, if they are not able to take some kind of investment which will give them this deduction, they have to pay taxes. There's nothing against it. So the key thing I liked about this was that it's a 200 plus years of experience. And maybe, Michael, you want to go over, maybe even if you have the Permian Basin, you were
Oh,
sharing. Now,
absolutely.
please go ahead. Sure.
Oh yeah. So to go over to get into a little bit more detail here. So we are focused a majority in the Permian Basin right here. We have 3 properties, but one of our bigger projects that we're very excited about is in Bivens Ranch. And I don't know if any of you have heard of the Bivens. They're Texas royalty. They used to be the largest ranchers in all of Texas, and since the 1980s, they have been leasing out their mineral rights to drill. Now,
Mhm.
what's really special about this property is it has over 60,000 contiguous acres, which is massive. We have around 120 available drilling locations. And with our model, ADD, acquire, develop, divest, we're only looking to develop about 5 to 10% of the available drilling locations, really prove up the reserves that are currently there, and then divest the asset. The other part I really like to talk to about Bivens is the formation is called a Bakken lookalike. And what the Bakken is it is the famous formation in North Dakota that we've been drilling for the last 10 years. And the reason that's important is just about every geologist, engineer, as well as landman is very familiar with the Bakken. They know it has a large pay zone and they know how to drill that particular formation, which is very important. The other 3 properties that we have are right here in the heart of the Permian Basin. The Permian Basin is said to be the oil field that rivals Saudi Arabia, and this is probably the largest basin for oil and gas in the United States, between this and maybe Alaska. And right now we are drilling with Vesuvius. They actually, just a few miles down the road, took an asset to over $1 billion and then divested that. So we're partnering up with them on this particular property because they're very familiar with the formation and the geology on where we're currently at. And then with Fisher County, this is an area that we have partnered with and worked for the last few years and had tremendous success. Every well has gone far past our expectations and even what we had projected. So this is a great area that we want to keep drilling in with our partner Browning, as well as on previous deals. And then we have Rocker Ranch and Giddings, which are both previous areas that we have drilled that we're still evaluating which wells are going to go there. To break it down exactly, right now we have spud the first 2 wells in Bivens Ranch. We've spud the first 2 wells in Hockley County, and we have already actually completed one on Fisher County and are in the process of completing 2 others. Because we've had such a great start to this fund, we've really been able to get ahead of the game with drilling 7 total wells by the end of the year will be completed. And
Wow.
Another part I'd really like to add, for a lot of the you people that are on here that have W-2 income, you know how locked in you are, right? With W-2, there's not much you can do tax season like myself. And
Yeah.
that is why oil and gas has been such a great opportunity for high income W-2 earners.
I do want to say this is for educational and entertainment purposes only, even though it's a 506c, which
Mm-hmm.
is we could talk about the returns and
We can.
everything. Again, it's not an offer. We are doing a webinar, Michael and I, next Saturday, not this Saturday, tomorrow, but next Saturday, 9 a.m., 9 a.m. And we'll put the link also for those of you, you can get a free ticket. Eventbrite is the platform where we are selling the tickets, but you could come and we'll be able to give a whole presentation, answer your questions and everything. So please look into this. To be very truthful, a lot of people have told me about this over the last 20, 30 years, and I've never ever looked into it. I said, no way, I'm not going to get my money and then lose the money. The exciting part is that I think this company, King Operating Corporation, has been working with over 30 syndicators and
Mm-hmm.
fund managers like me over the years, and they raised 200 million, then another fund 200 million, and this fund is now 100 million. So I think they have the clout. They have over 200 years of experience. Their
Mm-hmm.
CEO has written a great book also, and these are performing wells, which is the best thing. And the dividends or the distributions are strong, 7 to 14, 18%, whatever, 14%. It might be 9% next year. That's okay. I'm fine with that for next 3-4 years. And you get double the money back, 2.3x, and
Mm-hmm.
get the deduction of 85% of the investment this year against my, all the active income and stock income and dividend income and capital gains. So it's an active loss, which I'm very excited. What do you think about it, man?
I don't know much about the industry, but I've, obviously know a little bit. But so this is a fund structure, and so this would be like in your subscription or your private placement agreement. Is this a 5 to 7 year hold? How do we get out?
Yeah.
Great question. It is so it's a 3 to 5 year hold, and it's very similar. So we've actually mirrored our model off of real estate. So meaning when we divest the assets in 3 to 5 years is when you're going to get back the multiple as well as your initial capital.
How many exits have you guys done so far?
So on this model, we started in 2015. This is when Jay decided that he wanted to use a private equity model. The first exit we did, we achieved a 3x in basically 18 months. And then since then, we started up basically the second fund in 2020. And that one is still ongoing. So we've had the first exit, the second and third have been very strong, been averaging 8.8% monthly revenue. And we're really just building up the asset value to divest those.
Mike, what should somebody do if they don't have experience in this industry? It sounds appealing, obviously, to anybody. This makes sense, but like, how do we know what to look for? What would you tell somebody? What would you tell your mom or dad who was looking to invest, to do due diligence, to understand this business model more? Obviously, find out more about your company and things like that, but what to learn the industry?
Absolutely. The reality is none of us are geologists, right? If we go through the PPM and look at the science, no one's going to be able to really figure that out. A big thing you want to look at is the track record of the company. We've been in business for 26 years, as well as our model. Really, what differentiates us to every other oil and gas and a lot of the horror stories is the standard model is we'll raise $100 million and we'll drill 10 wells. And off those 10 wells, you're going to get monthly revenue for the next 5 to 15 years, hoping that oil prices stay strong in the beginning and that you can get that return back quicker. I would say the biggest difference maker, and what I would really recommend is, I know Vinney had mentioned it, our owner wrote a book talking about our model in oil and gas. And anyone that's interested that actually watches this that would like to receive a copy, just let us know, send a message to Vinney or Beau, and I'd be happy to actually mail you out a copy, because I do think the first step is better understanding the investment, right? Really going through the presentation and getting a good idea. And from what we found, many of our partners are familiar with real estate. And there are many similarities between our project and a multifamily deal. And I think that's why it's made it more simple to understand than a standard oil and gas deal. So that the biggest thing I would recommend is come to the webinar, learn more about it. Because if you don't understand it, you're probably not going to move forward.
I love that, because in multifamily last 18 years I've been doing it 80-20 split, both. So it's the same way. 80% goes to the investors up to the return of capital, and 20% to the general partners. And we are general partners, by the way, in 4, and then we become limited partners. So there is a special clause which lets you do that. So you get the whole deduction as active loss, and then you become limited partner. It's, and the other part is after the waterfall is done, 80-20, then there is 65 or 70% split still that goes to the investors, and then the rest 35 or 30% goes to the general partners.
So
very similar to multifamily.
I'm looking at getting a quarterly distribution, and then monthly distribution. And is that determined by the investment I put in, whether it's $100 or $1 million? There's different ranges.
There is, yes.
Okay, and then upon exit, 3 to 5 years from now, who's buying this? How do you guys position to sell and exit out? And then how are they valued? Like a multifamily is valued on cap rate, or Vinney can explain it better than I can, right? How we compress the values. How do we compress the value of this oil well?
Hi friends, this is Vinney Chopra from here in Danville, California. And you might be saying, hey Vinney, what are these over here? I wrote this book a few years back, Apartment Syndication Made Easy. It became top seller. I came from India with $7 in my pocket. It says 500 million. It's going to be 1 billion very soon, very soon. I'm right at about 850, 900 million. And then I'm ready for the next billion. Actually, you will see that happening, 2 billion in this book also. The other book I wrote, which has been a very big positivity, has been my life. Always, I've been married 43 years with 2 children, and the beauty is to be positive, the mindset that can take you to all the places in the world. And that's the book that also became big seller. My 3rd book, Senior Assisted Living, is coming. So do yourself a favor, go ahead and click the link below to get free copies, audio copies of these books, even printed copies of these books. Printed means digital if you can't afford it, but I would highly recommend for you to get these, or go to Amazon.com. Just go to Amazon. I got it in soft cover, in hardcover, in Kindle, in audio, also the Spanish version of this book also. So let's crush it, guys. I know you can be successful. I know you can do the kind of things that you want to do in life and have the streams of income and know how to really, educate yourself so that you could become a strong force in this world in real estate. I know you can. So take that step. Don't just be on the sideline. Take charge of your life. Take charge of your education.
Versus, if that's what we're calling, to 2 or 3x the value, and then sell it to a bigger private equity firm or whatever, however the exit looks like. Just so it doesn't have to be too in detail. Just, I know people will go to the webinar.
Yeah, absolutely. So that's a great question. So who are our potential buyers? We have 2 real buyers here. We have people that are looking for income producing properties, like private equity, family endowments, pensions, family offices, that could buy a package of the wells. But for the larger projects, who we're really looking to sell to is a mid or major producer. They're the ones that are going to go in that field over the next 5 to 10 years and fully develop all of the wells. And how we accumulate that value is every time we drill a well, there is a PDP is what it's called. You get 2 PUDs, which are proven undeveloped. And essentially that has a proven reserve. So every time you drill a well, you're proving up the reserves of that zone, because technology has come so far with oil and gas. There's something called 3D seismic, where you're able to see in the ground where the hydrocarbons are and how much hydrocarbons are there. But the real question, Beau, is how much of that hydrocarbons can you actually get from the ground? And you don't really know that until you go you drill a well that has the same geology and targeting the same formation, the same part of the formation. So that is really how we do it, is by drilling wells. We are able to prove up further reserves on the property, and these reserves are valued so well that if once you have a PUD, you could take out an RBL bank loan to drill additional wells just based off of those reserves. So that's equity, just like in real estate.
Oh, cool. Very good.
Very good. Very good.
I learned a lot. I'm excited to go to the webinar to learn more. And
Sure.
we'll put a link down below. Vinney, any closing thoughts?
Thank you so much, Mike, for coming on our show. Again, we like to bring ideas, guys. If you like this episode, please go ahead and share. And again, click the link so that you could register for free ticket to come on Saturday, which is 14th of December, 9 a.m. Pacific, 12 noon Eastern time. And it's going to be Eventbrite. If you could even just go on Eventbrite and Google Vinney Chopra, you will come to that also. And we are also my LinkedIn and my Twitter and everywhere, Facebook. My team is putting the link. We would love to have a lot of you. The high net worth earners, you have to be accredited investors only, verifiable accredited investors, so that you could really come and save tax. It's a tax deduction against your W-2 income or any active income, AGI, aggregate gross income. So in other words, this, if you spend 200,000, just like the example was, you will get like about 160,000 or 170,000 minus active income that you will be able to deduct, which I'm really looking forward to that. I know my tax bill was like through the roof this October this year. So next year, I don't want to be in the same situation. That's why I explored this in the last 1 month. And I found out my very good friend for 30 years. I've known him, and he's very meticulous, very thorough. He shared with me last year that he had invested with this company and saved a lot of money. And then I just texted him about a month back. He says, Vinny, guess what? I'm putting more money into it with the same operator. And then talking to Mike, I found out two other individuals very close to me, they have raised 20 million and 9 million. It just boggled me. I said, my gosh, if everybody is searched through this company so much and there are so much positive reviews and everything, why not I also get on the wagon and spread the good word? So no, thank you, Mike. Any last comments you'd like to say?
I just want to thank you, Vinney and Beau, for having me on the show, and I'm excited to have all of you guys show up to the webinar. We will go into a lot more detail, and of course, answer any questions you have at that time. Thank you, guys.
Thank you. And I can't wait to come there next month in January. I'll be in Dallas and looking at my hotels acquisitions that I'm doing, and also love to meet you and Jay, the CEO, and so forth, and maybe go to the rig, like you said, in Midland, Lubbock, Texas, or like that. But thanks again today. And any last comments, Beau, brother?
No, this was good. I love learning new things, and I talk to high-paid W-2 people all the time. They're always looking for tax strategy, right? Like, the other day I was talking to a lady, $1 million a year, W-2, no tax write-offs. It's just like, okay, come on, guys. Why make that much money if you don't know how to keep it in your pocket? There's no point. It's like you're better off making a third the money because it's basically going to equate to the same thing. But people need to learn these things, right? Like cost segregation, oil and gas industry, owning a business, Section 179, all these things people don't seem to know about. They're in the corporate world. Corporate doesn't teach any of this stuff.
So true. The paycheck, we think that we make 500,000. Not really. In California, we make 250.
Yeah.
The taxes, state tax, 13%, and then 37%. It's half. So one needs to be really vigilant and just learn. It's not that rocket science at all. That's the beauty of it. I'm finding everybody could save on taxes if you want to. If you don't want to, you don't care, then nobody can help.
Not only that, but also get a return, get dividends and a nice return
I mean,
You
you
get
know,
a 2 times
I've been
multiplier in
on
a couple of years. That's
charitable
great, right?
trusts and other stuff. Darn it. They said, Vinny, give $500,000 here or 750, you get full deduction. I said, where will I get my money back? He said, no, it's gone. That money now, new company, trustee is going to decide who that money should go to, whatever charitable things and all that. But I think this is so exciting that we get the returns, dividends, 9 to 14%, whatever it was, like every monthly in the ACH, return of capital, it comes. And then when we 3 to 5 years, just like in multifamily, we're going to get the X also because return of full capital will be coming back. And then on top of that will be the equity gain, we call it in multifamily, which will be the extra. So this is very exciting, I think. And the best part is the tax deduction active income. I mean,
I have one last question, actually.
Overlook that.
I have one question, just curious. When an exit happens or a sale happens, is there like a 1031 for
Yeah,
this?
I think so.
Is it a 1035?
No, it's a 1031. It's actually a 1031.
1031.
So from the
please
sale,
explain that, Mike. That was very good. I'm glad you brought it up.
Yeah, that's a great question, actually. So when there is a divestiture, it does qualify for a 1031 exchange, where you would actually be able to take that asset and roll it into another oil and gas fund, or you could roll it directly into real estate as well. So it would qualify for a 1031, and that way you're not paying any taxes on your profit.
That's beautiful.
Oh my gosh. This is mind blowing. I need to put them in bullets when we do the presentation next Saturday. Hey guys, please join us next Saturday, December 14th, 9 a.m. It's free webinar, free ticket, but you got to have a ticket. Then you will be sent the Zoom link, to your email or to your cell phone or like that. Please go to Eventbrite or click the link below so that you could buy the ticket. We'll sell out. We have capacity of 150 people, I think, that we can have in the webinar. Thanks again for watching, and we'll see you next week. See you at the webinar. Beau and I are together to really bring the best to get your business to the next level.
Do me a favor, subscribe and share. I really appreciate it. And I look forward to connecting with you in the future.